myself came to Financial Crime Forum probably to get some tips and tricks, best practices for how to go to market, whether it's you've got some challenges that you're facing that you want to solve, and this session is going to be one of those. We're talking about some challenges that you may face as a credit union, as a bank, or just generally in the financial services industry, and we're going to give you some practical solutions for how to solve those issues. And we've got Don here with us, who is one of Claritas' clients, so we're going to use him as kind of a case study story, and he's going to go into more detail on how they're using Claritas to achieve some of their goals. All right, so we kind of introduced ourselves, but I do want Don to speak up and tell us a little bit about Lake Michigan's background, where you guys started to how you got here today.
Yes, we started in 1933, right during the Depression. Teachers couldn't find a source for funding to buy a home, so a group of teachers got together, pooled their funds, and formed Teachers Credit Union in 1933. We expanded into Florida in 2015. We realized that we had a lot of members at education homes, so we're going down to Florida. Our CEO was vacationing in Fort Myers, and she texted, there's any credit unions down here. The weather's beautiful. I'd love to get down here. Okay, there's something going on here. So long story short, we ended up buying Encore Bank after we opened up 3 organic branches. We had a more of a commercial presence. Since then, we've added additional branches. We closed on a bank called Pilot Bank in Tampa in December of last year. In December 5, we're going to open up the conversion with our core operating system. So they have 6 branches in the Tampa area. They'll bring the number up to 20. 2016, our assets reached $4 billion. We became the largest credit union in Michigan. And today we're at $11 billion, and we have over 544,000 members. I've worked at the credit union for 12 years. Previous to that, I was at Chemical. And looking at our members, when I came to the credit union, obviously the LMCU as primary account holders, and it's actually not a true reflection. So we looked at every member that was 18 years of age and older with a unique Social Security number, and that's where we come up with 544. It's a lot easier to track and measure against census data. For example, in Kent County, where most of our branches are, we have 1 out of every 5 adults have a relationship with the credit union. So things like that, that's just a tip, trying to get your members converted to unique Social Security numbers.
So Don, I'll let you kind of continue a little bit more about yourself, but you mentioned you started about 12 years ago.
Yep.
Yeah, and you came from Chemical?
Chemical Bank was there, with Fire and Bank at Chemical for 9 years. And then before that, I worked for a company that's now owned by Sherwin-Williams. And before that, I worked at a couple of ad agencies that did work with banks and credit unions. So I've had that in my blood for almost 38 years. So when I came to the credit union, I thought, boy, if we adopted an ad agency concept where we had people internally, account executives that were responsible for the different business groups. We have an account executive for mortgage. We're the 3rd largest mortgage originating credit union in the country. So we have a dedicated team of account people that deal with the mortgage group. They plan strategy. We put creative briefs together. We have another individual that does that for our retail side. We have another person that does that for our commercial business side. And then another person that deals with our investment group, our insurance, and our consumer lending group. That's worked out really, really well because it's responsive. Hey, we need something. Hey, let's meet. You got 10 minutes, I'll hear it over. To support that, we have a group of creative team members. We have art directors, we have a copywriter, we have project managers, and we also expanded to a video department 4 years ago because the internal demands are so great for video. We actually have a studio that we put together, and we're saving about $85,000 a year in doing the videos in-house compared to what we were doing before we outsourced it. It makes it a lot easier too. And with a team, we have 20 on our team, 15 in marketing, or 16 in marketing, 4 in community relations, which rolls up under marketing as well.
All right, so let's jump into what the session's all about. So what challenges do financial institutions face today? You guys, if you want to share some of the ones that you're facing, I wanted to, our Claritas folks in the room, I wanted to kind of point you guys out because you talk to clients, you talk to prospects, industry peers. What are you hearing from the industry are some of the challenges?
Yeah, I can start. Obviously, mortgages, right, kind of starting to dry up. That's a huge point of contention, and diversifying into more deposits. CDs are clearly kind of on fire right now, so that's one key change.
Sarah, back.
Hi, I'm Sarah. I'm also an account director with the LMCU. And one of the things that a lot of the credit unions seem to be focusing on is increased low risk. So some CDs, those types of marketing aspects.
Kate,
We also have refis drying up.
any other things? I've heard, mortgage demand slowing, decline in aggressive lending, expansions and rebrands and the challenges that come with that, trying to navigate new data partnerships. Anything else you guys are hearing that you want to shout out?
Staffing and even like the leaders, they're so just fatigued from staffing and just everything that came with the pandemic. So a lot of stir up.
Is that branch staffing, like brick and mortar?
For sure, branch staffing,
Okay.
but also I mean in leadership, just hearing a lot of CEOs just ready to merge.
Yeah. I can add one more. It's just, really, the fair lending aspect of, cultural banking is really a trend right now. And, now using data to really, serve your market instead of having almost as like a block to fair lending. People want that. Our clients are finally starting to be a little bit more welcoming to cultural insights, just to again kind of prove out that we're, reaching the entire community, not just a specific goal.
So we're gonna, on the next slide, we're gonna talk about 3 challenges that Dawn called out. Dawn, do you want to go into a little bit more about what about these
Sure.
challenges?
Yes, so looking at the Michigan Credit Union, really as an industry as a whole, growth is critical. The more members we have, the better off we are. There's so many competitors that are trying to get those available prospects from us. So that growth is one of our key initiatives. Adapting, I have a friend that was in the Navy SEALs, and one of their axioms was, you always have to adapt to changing conditions, and it's the same with us. The staffing issue is a great example. That is tough. Rising rate environment, that makes it tough. Unemployment starting to go. Inflation is a big factor. The runoff from the deposits we earned during COVID, we had $1.5 billion that came in during COVID. We averaged about 350 net new deposits a year, so that was huge. Now that's starting to run off, so we have to adapt to that. And then efficiency. We need to become more efficient at what we do, the resources that we have, to help give us an edge over our competitors and to ensure our short and long-term survival. So those 3 are ones that, as a credit union, we're really focusing on.
And you guys might be facing some of the same issues too. So we're going to focus on these 3 things for the session. If you kind of agreed with Dawn that we're facing those same issues, you're not alone. So I've got a bunch of stats, some article information here to kind of back that up. The BAI research is saying customer acquisition is one of the biggest challenges in banking. The attrition rates, membership declines, depending on your asset level, that will obviously change. And then in the middle there, that's all related to adapting. The credit union times talking about the economic downturn. It's going to go well into next year. They're not the only ones reporting that, obviously, but some of that goes with the commerce disruption in China, with inflation, with unemployment, just as Don was talking about. And then on the right-hand side, related to efficiency, so mortgage applications low. Statista talking about loans being granted by fintechs, which I'm sure you guys know, if you're not a fintech, they can be a big threat because they have that digital-first attitude that has taken some traditional banks and credit unions a little bit longer to catch up to, so they're more attractive in some ways to younger audiences that have a longer lifetime value. So that's a big competition right there. And then the financial grant. Back in May, they reported last year 161 credit unions merged, up from 130 the previous year. And on the surface, that sounds like a great thing, but you think about the challenges that come with that. So if banks or credit unions are merging, there's not a new location where previous members or customers were located, then you're potentially leaving financial deserts. just the whole disruption that goes with a merger for a customer and member. It's a good opportunity for them to look elsewhere to see if they want to switch. So there's challenges that come with that. These just kind of back up what Don was saying. All right, so we talked about a lot of issues, but we want to talk about some solutions. So the next couple of slides are going to go into a few practical solutions to the challenges that we're talking about. So when it comes to growth, on the screen here you'll see kind of a snapshot of this couple right here. So one solution to the growth challenge, how do you gain new members? How do you gain new customers? Think about when is the last time that you analyzed your customer or member records. So segmentation is a big one. It says it right there in the title. Segmentation can uncover so much about your current customers and your members so that you can use that information to then go out and find new ones. You have the right messaging to attract the new ones. And then just learning more about your members or your customers so that you can create more tailored campaigns to try to upsell, cross-sell. And Don, you're using Site Premier, which is Claritas' segmentation. Can you just tell us a little bit about what that does for you, what attracted you to it, what kind of insights you get that you probably wouldn't have been able to access to?
Yes, thank you. So we had, at the time we started working with Claritas, we had several 100,000 members, but we really didn't understand what those members looked like. We had them out there, we had a CRM system, we just didn't feel like we really fully understood those members. So with the help of Claritas, with the segmentation strategy, we're able to get a clear understanding of those households. There's 60 different groups. We break them down into 7 core blocks of data, and we use those very effectively to become more effective, efficient. We can adapt to changing conditions. Like right now, we've got a campaign underway for CD deposits, and through the insights, we realize it's not just people that are 55 and older that have that disposable income for a CD, but we found a couple of segments of younger people that are more tech-oriented that are indexing way high. So we're putting a significant amount of money behind that group, which years ago we didn't do. It was always that older group. When I was at Chemical, the average CD age holder was like 59 or 60 years old. So we're definitely shifting toward that younger group because of the segmentation data. We really wanted to have a better understanding of who our members were, what made them tick, what groups they were in, what propensity they had for certain products, and just gain those insights to make that experience through the marketing department much more efficient and effective. And it's been wildly successful. We couldn't get by without that. And I think it also helps differentiate our credit union from a lot of our competitors. Gives us more tailored messages, the look and the feel of the images and the material, the tactics that we use. They're representative of the target audience we're going after. It's just not one photo for everybody, but it's customized. We've enhanced that with 5 ways to reach out to us for our members, to get in touch with us. Phone, click, stop by a branch. We have an appointment scheduling system. And we also are looking at text messaging as well. And then we have the chat feature as well. So it's actually 6 with the text feature. But as many ways as possible that your members can reach out to you for a quick response to that advertising or that marketing piece that went out is critical. If you put that investment into it, you've got the right message, you've got the right people, you've got to make sure that you follow up on that end. Along with that, we work with our retail team because we've got this great set of products through the segmentation group. We've shared those segments with the branches, so the branch staff know what those segments look like. We then assign a person in each branch. We have the manager pick what we call a marketing specialist. It can be a teller. We actually have managers in some of the branches. They're the marketing liaison within that branch to make sure that all the posters are up, the counter mats are up, the drive-through banners are in the right place, that the team is organized and are up to speed on the promotions that are coming up. So then it's full circle. If you do a campaign they don't know about, it's like, there will be a lot of inquiries. That's good. So we like to let them know ahead of time. We also get their feedback through the marketing specialist afterwards. Hey, what worked? What would you change? Tell us 3 things that you'd like to see different next time. So that's that bigger picture. But it all starts with that segmentation. Understanding who your members are. And that's critical. It's critical in this day and age.
Yeah, and to go along with what Don's saying, so I'm assuming a lot of you in the room probably use segmentation today, but if you don't, if that's not something you've explored, we have kind of 3 tips. We've got a lot of tips, but 3 tips that I'll call out for when you are evaluating a provider who does offer segmentation. So the first tip would be make sure you're working with someone who has a financial industry specific segmentation solution. You don't want something that's general to the entire industry field because you guys have special needs in the financial services industry that other industries don't have. So that's tip number 1. Second tip we have is make sure the data is actionable. We've had a lot of clients come to us over the years where they've worked with other providers. They've gotten a lot of data returned, but you can't actually do anything with it. They can't turn those insights into action. So make sure whatever you're being returned, you can actually apply that to a campaign. For example, you see here text usage above average text for this couple here. Well, that tells you that multi-channel campaigns would work for them. But if you saw lowest tech, then you probably want to skip the digital and just do direct mail type campaigns, offline campaigns. So information like that, you can actually take it and do something with it. And then our third tip is especially relevant right now. Make sure your segmentation is built for the long term. And what we mean by that is when the economy is kind of up and down, especially now, you want to make sure that the insights that you have can still be applied. Because a lot of segmentation models, they're flat in terms of, what would you say, just they only work when the economy is stable, if something is kind of up and down.
Yeah. So the cycle, the model is updated annually. We usually see what we've done for Dawn and some of the other folks in this room is build aggregate group roll-ups, right? They'll usually do well with 15 to 20 different segments individually, but from an activation standpoint, you're not going to ask your marketers to come up with 15 to 20 different individual marketing strategies. So, but for the individual segment assignment, especially during COVID, as dollars are flowing in and out of deposits, people are signing up for new accounts, etc. The segment assignment for an individual changes about anywhere between 40 to 50% for that individual assignment. So if you're segment 1 or 5, etc. Right? But what you're seeing when you roll those groups up is you're seeing the segments in the roll up really just the ebb and flow as people are moving into new life stages. They're getting raises, they're increasing their IPA, they're buying a home. All those factors play into the cycle segmentation, which is again why we're pretty persistent as to updating your segmentation annually to understand where your segments are flowing into those rolled up life stage groups. So again, that's why there's many reasons why cycle is very powerful beyond that. And really, it's just build a fair lending lens, right? So you guys can grow using this tool and knowing that no matter what size you are as a financial institution, that you're safe to use it in the marketplace.
You get to the next one. So again, going still with that growth challenge, a stat that kind of surprised me when I first heard it is 90% of website visitors are anonymous. And what we mean by that is they're going to your website. Perhaps if you look at this woman here, the story behind her, she's banking with a credit union right now. She's unhappy, so she's looking at some competitors to see what their rates are, how they compare to who she's banking with now, that she might want to switch to them. But she doesn't fill out any type of form, she doesn't give any type of information. So if you're that credit union whose website she's on right now, how would you know that she's visiting your website? So this is where I'm going to ask a question of you guys. Has anyone heard of or currently leverage an identity graph?
So
Phil's going to explain
yeah,
what
I'll just
identity graph
a little
is.
bit of background on an identity graph. Really just think about yourself as a consumer today and your physical and digital footprint, right? Everybody has an address that they reside in, I hope. And we all have mobile devices, emails, smart TVs, right? And what we're able to do at Claritas through acquisitions over the last couple of years is build this identity graph, which essentially think about it as an Excel file of your membership or customer base, right? You've got the first and last name of that member or customer, you've got their address, you have their cycle code, but now we have their primary active email, we have their IP address, their cookie ID, etc. So from what we're presenting here is kind of the reverse engineered way to look at it, where we can actually tag the website. And similar to how Google Analytics, you really know kind of what's going on the web page. Claritas is really competitive in the marketplace to help you guys understand who is actually showing up and de-anonymizing those anonymous website visitors. Because we have the graph, we're able to map an individual IP address when someone lands on the website. We can say, great, well, we know John Smith has this IP, and we can move it back to a physical address. So again, de-anonymize. I mean, once again, some people know this, but all we need is that address, and then you can start to loop in all of that other psychographic data, life stage data, income data, and really understand, who is this person coming to the site beyond just, John Smith at 123 Main Street.
I was going to add just one quick thing on the identity graph. And it reminded me from a conversation I had with somebody right before this, but the other benefit of identity graphs in certain cases is just the number of identifiers that feed the graph, right? So if you think about email addresses, the digital channels you use, the Apple phones you use, the car you drive, all of these things sit out there in disparate data sets, right? And so what a graph does is essentially connect those to actual households and individuals. And so from a privacy standpoint, from Google doing away with cookies, from all this stuff that's changing in the industry, you might change your device tomorrow and get another iPhone or something else. Your device IDs might change. So a graph is critical because it keeps all that stuff current, right? So if something changes with your members a month from now, the right identity graph is going to pick that up and be able to resolve the identity of that individual current as of today, so it's not outdated based on what type of device they have. But it's also staying in front of the privacy laws and regulations, just to make sure.
And I'll add a point to that. Sometimes we do like data hygiene projects where you just don't have the most up-to-date email of your members. So that's like an annual thing that we can just refresh, making sure that everybody's got the most up-to-date contact information available.
Yeah, so essentially when you add an identity graph into the mix, you take your anonymous website visitor, this woman here, and then you kind of bring her to life, whether she filled out a form, whether she contacted you or not. And you find out more about her that you can then use in your retargeting campaigns. So maybe you find out she donates to the arts or cultural organizations, and maybe you want to do a campaign. You've got a lot of members or a lot of customers that kind of fall into that boat, or prospective members or customers. So you want to do a campaign that includes imagery like that, so that when she gets that email, when she gets that direct mail piece, she sees that, okay, this credit union really knows me. I need to pay more attention to what they have to offer because, I'm not banking with them right now, but if they know me already and I'm not banking, then that's somebody I want to invest my money with. So the next thing that we'll talk about is adaptation, some solutions there. So question for you guys, think about this. When is the last time you surveyed your customers, your members, to ask what it is that they really want? As formal or as informal as you want it to be, whether it's social media posts asking, what do you guys want to see us post more about? Since we're going into the holiday season, you'll find out that your customers or your members need tips on save money. They've got a lot of people on their list to buy gifts for. Or a full customer member survey to find out, what our next solution or product line needs to be, what's the next best offer, where are we excelling, where do we need some help. So Don, I wanted to ask you, what kind of surveying or do you guys do at the commission?
Yeah, question, we have a spot on our website where anyone can respond. Every new member gets a survey that's sent out to them right away just to make sure that their level of satisfaction was met. We sent an email out to about 112,000 of our members asking them if they'd be willing to serve on a panel, and 35,000, it really blew us away, 35,000 of them said they would be willing. So if we have advertising concepts, questions about products, we can send that out to them when we hear feedback from them. So the participation, and there's like a thirst for feedback. We're really surprised at the willingness of our members to do that.
Yeah, so then you see on the screen here, I've got some what we call psychographics. So it's basically what people think, what people feel, their attitudes, their behaviors, that sort of deal. These are from our own data set that we have access to. So that's the type of information that you can get with surveys to your customers or your members. So maybe you hear that I'm concerned about credit card or identity theft. So if you hear that from your customers or for your members, but you guys have a great solution in place for that, that might be something that you need to do a campaign around to make it more visible to your customers or your members. Or I hate having to go to the branch. That could tell you that perhaps we need to look at streamlining locations, or perhaps we need to beef up our digital efforts. So there's a lot that you can find out from what we call psychographics, based on survey information, whether you do it yourself or you work with a partner who can do it on a wide-scale basis for you.
I'll just add something like, right, some of the financial institutions don't always have the resources to survey their entire customer base or membership base. So Claritas does have an off-the-shelf survey called Financial Track, and it is annually surveyed, and it's 50,000 respondents. And through cycle, right, that's how we're connecting that data, right? What are those financial attributes that these individuals really care about? And again, we're scoring that basically with lookalike modeling, and we want to have a more in-depth conversation about how that's constructed. We can talk after, but that's right. A lot of organizations don't always have the bandwidth to just survey their entire membership, taking the data, and like, what do you do with that? That's where cycle becomes really powerful. So you get those answers tomorrow, and then you can say, great, now we know how to position this campaign, due to those responses.
We use focus groups as well, and when I was at Chemical Bank, we used a local college to help put together a survey, and they did that as a team class, so it was no cost to us, and we paid $800 just for some postage and other things, but that's an idea too. Check with the local college or university, see if there's something that they may be willing to do. They learn from it, the students learn from it, and then you learn from it as well.
All right, so then we're going to move on to some solutions related to efficiency. So if you see on the left-hand side here, just kind of in general, when you address internal pain points, it has a ripple effect that can be beneficial to customers and members. So what we see here, we see someone from the largest underbanked consumer group who happens to make up 20% of the population. That is a real stat. From a report that we just put out. So customer service is the #1 reason that they switch financial institutions. And that's definitely something that can be worked on internally. And part of how you solve that is understanding what Phil was talking about earlier. Are you reaching your entire community? How are you benchmarking with your DEI efforts? So Don, I know that you guys have expanded into Florida, so DEI and reaching underbanked consumers, I'm assuming that's something that's more
Yes.
of interest to you guys.
Yes, it's actually a board initiative that we have, so we have a specific strategy in place to reach out. They want to grow our Black, Hispanic, Asian groups by a certain percentage, so we've got that as part of our strategic plan. We're going to be devoting a lot of our advertising or messaging to those specific groups as well to help us achieve that goal.
Yeah, and just thinking 20% of the population, that has potential to be a huge piece of your customer and your member base. So making sure that you're making them happy and being the largest underbanked group, I mean, you're checking off a lot of boxes if you keep up the customer service. And also, underbanked consumers, they tend to be on the younger side, so that's the potential for a longer lifetime value. So, if you get them, you make them happy, then you'll have them investing with you longer term. So that's a win-win for you as well. And on the right-hand side there's another stat that we've got. So 55% of leaders say organizational digital strategy is often or always outpaced by the demand for the business. So I've got a article from the financial brand that I looked at. So the #1 investment that they suggest, even in times of economic downturn, is on digital banking transformation, which is easier said than done when other things move up your priority. So some of the things that they suggest, and we would suggest to trying to make that a priority or justifying it to those that you can get the budget from to do the digital transformation. A couple of things: be fact-based in your request. So we've got this stat here. This is a fact. This is Claritas data. So that's a fact that can say, okay, customer service is an issue, and if we dig a little deeper, this is what it's coming down to. So if it's, let's say, your app isn't that great, or you don't have an app, and that's something that you need to have, and that's one reason why some of your members are switching, then you've got a story there. And so the second tip we have is telling a story with a clear request. Like I just said, our app isn't the greatest, or we're not doing enough digital campaigns, we're not doing multi-channel campaigns, we're not hitting the channels that these customers or these members are in, so they're not hearing from us, they only hear from us when something's wrong. So telling that story, bringing that data in there, whether it's data that you've collected from other sources, from our articles in the financial brand, or that you're just seeing with the surveys that you're doing, focus groups that you're doing, that can help to make that case to leadership that we need more investment when it comes to digital strategy.
One thing real quick with customer service, we like asking to the branches regarding the membership, what can you start doing, what should you stop doing, what should you continue doing. That's a really good way to kind of analyze and assess what you're doing. We also like to refer to our tellers as askers. You shouldn't be a teller, you should be an asker. And we give examples of someone that came in to deposit a check, the teller asked, they wanted to send $50 back in cash, they went through that transaction, the person left. And then we did another scenario where that same person came in, and then they were asked, oh, do you mind my asking, what are you saving for? How are you putting that much money in the savings account? Well, my wife and I are saving for a mortgage, we're saving for a down payment. Oh, were you aware that we have mortgage levels? I'll introduce you to one. Do you have a moment today, or to have them follow up? That's the best way to reach you. So we show the tellers that difference, that dichotomy of being a teller versus being an asker. And that's really helped increase our customer service score dramatically. And having the tellers understand, the askers understand the impact on people's lives they're making. They can help a single woman with 2 kids that's living in a cramped apartment and has an unreliable car. She's going to lose her job because of that, to be able to afford a car. So she's able to get to work on time, preserves her car. Or a couple that's fighting because they don't have enough room in their house, they're able to get an affordable mortgage that's only $10 a month more than what they're paying in rent. So those individuals at that front line can change people's lives. And when a lot of them are younger, it's tough to get that understanding in them, but when they do, you see that light bulb goes off, those questions are very, very powerful, and obviously the revenue goes up because of the services that we're able to provide for them.
All right, and then again with efficiency. So Court and I on the marketing side, we do a lot of things related to measurement and optimization. And we've noticed when it comes to marketing, a lot of our peers in the industry, measurement, accurately measuring the success of your campaigns, it's one of the most overlooked steps of the marketing process. Perhaps it's because you don't want to invest the time and budget into getting those insights, or perhaps you're just kind of happy with those surface level metrics that paint a pretty picture. But dig in deeper, you might see some rooms for optimization. But if you can't answer questions like these on the slide, then you need to beef up your measurement solutions. So we have a couple of tips of what types of things you can do, what type of information it can provide for you. So campaign tracking, that basically tells you, did you get what you paid for? That would tell you things like reach, frequency, whether you have real or fraudulent impressions, and clicks and engagement. So campaign tracking is one thing that we suggest. Another thing is what we call an attribution analysis. That will tell you when, how, or if channels actually moved audiences to conversion. And then lift analysis. That tells you how individual audiences actually and channels impacted your ROI. Gord, I know you have a couple differentiators between lift and
Yeah. I think the lift piece is really the incremental. So it's the incrementality. So absent of the campaign itself, what would you have achieved? Right? Running the campaign, comparing those two, did you actually achieve an incremental lift? And it doesn't have to, it can be in whatever KPI you might have. But that's the slight difference between the two. Attribution is just telling us, okay, these channels did have an impact on moving my prospect or my customer to a conversion of some kind, whether it's filling out a form, whether it's signing up for a newsletter, whatever it may be. That's what's directionally going to tell you what campaigns, channels are performing and what audiences, but then incremental lift is going to tell you overall that this campaign actually drive more revenue than bottom line. I think the other important thing to note too is, and I think we run into this a lot, I think a lot of people might be overwhelmed with the idea of measurement. They don't know where to start. It's too complicated in a lot of cases. And it really isn't. And it's, whether it's a Claritas partnership, whether it's another one, there's technology and tools out there that can make it very easy. So all these questions up here, you guys should be able to answer relatively seamlessly. And that also goes for new channels, like podcast advertising, advanced TV. This is stuff that we've been getting into over the last year, and it's been very, very popular. you see more and more financial institutions that are starting to get into that as well. But that stuff can be as easily measured as email or direct mail or outbound. Just keep that in mind.
Yeah, and then identity graph even has a play here to kind of help you ensure that accurate attribution. So it's kind of connected to that full spectrum of marketing. It just doesn't fit into the identity bucket. It fits into that deliver bucket within the campaigns. It fits into that optimization bucket of measuring the success of the campaign. Don, I'm just curious, what kind of KPIs are you working to mention?
Yes, every time we do a campaign, we have goals. We sit down with our marketing account executives or business groups. For example, if we're doing a first time home buyer campaign, we set a goal, what that number is going to be, and then we measure against that. We wait 90 days after that campaign concluded, and if somebody's converted during that 90 days, we attribute it to the marketing efforts for non-members. Same for members. For a member, they're not able to they don't have a mortgage through us, or a checking account or a credit card use at 90 days is kind of a guide. It's important to set those goals ahead of time so you have some expectations to strive for. It's very important to do that and monitor those activities as you go along.
I'll add to that. I mean, what Don's saying is basically right. What's the right attribution window by product for financial services? We're not selling Nike shoes, right? So credit cards, checking accounts, all of that is going to convert at a different rate. And so, again, it's whether it's Claritas or another vendor, knowing where to set, how do we build that CPA model, knowing when they're going to be converting by products, that's something, again, incredibly important, but it's just not, we send a campaign a week later, that's our window.
And one last quick thing that I forgot to add that's right in line with it. There's also brand preference is also something that we've gotten into over the last year. So that is essentially being able to apply a value to the brand loyalty that your organization has on individuals in the marketplace or wherever in the market. So we all know that if we're familiar with the brand, if I've been a long-time member of a credit union, an ad that I get from that credit union maybe will have an impact, but my experience with the credit union is going to have more. A lot of places won't actually apply a value to that brand preference, but that is something that we're getting into. But I think it's important as you get into new channels or even existing channels, if you start to see an enormous incremental lift from a campaign, you might think it's all because you've added 2 more channels or you've increased your frequency, and that may be the case. But there's also some brand loyalty that's factored into that I think is always good for you guys to know as well.
So we talked a lot about some of the challenges. We talked about some practical solutions. And now we want to kind of talk about a case study to tie everything together. So this is a real case study we just kind of completed recently with Lake Michigan. A second case study with them. We have so much success that we've got 2 case studies out of it. So Don and Phil are kind of going to jump in more here to talk about the last success story that we put on paper. So the case study started off with growth in membership being the main challenge that was being addressed.
Okay, so this is kind of going back to the beginning. So back in 2018, when Don and I started talking, pretty average initial discussion. A lot of, I'm sure some of you work with MCIF, CRM systems, maybe seen cycle data on your file, no idea what it means, right? It's like this weird, numeric sign of a key. And so it's very common for prospective clients kind of knock on the door and say, we know cycle belongs to Claritas, how do we leverage this, how do we get value from it? We're paying for this. And that's really what happened with Don and I starting the partnership. He was working with another partner who was delivering the data, and really started to construct, how do we drive value from the segments? What can we connect to segmentation? And then start building out these custom groups. So that's really how it started. And I will just say, none of this can just be turned on overnight, unfortunately. And if there's anybody out there saying that they can, they're lying. It probably took us about a year to go from, getting the newest set of data on your membership file to then rolling up the groups and building out that market strategy. But I don't want to talk too much about how we built that up, but it was very much a crawl, walk, run, and that's how we do every single relationship at Claritas. Is like, how do we just get you on the ground floor, give you a little bit of data to be dangerous with, and start to fuel some of your campaigns, and then just slowly build it into activating, and then kind of what we were just talking about is optimizing on the back end. But Don, I don't know, good job.
Oh, that's good. We also looked at branches. We have 60 branches. We have fewer back then, but we looked at lookalike branches. So this branch might have the same characteristics as this branch from a segmentation standpoint. So that allowed us to have unique campaigns for each of those lookalike branches because we knew what that segmented population would look like within a 4 to 6 mile radius of that branch. And that drove a lot of efficiencies because it allowed us to more effectively generate results.
All right, so the campaign that was tested was a switcher campaign. Don, I just want to remind everybody about that stat. A few slides back about financial brand reporting, 161 credit union mergers last year. So a lot of that happening. And Don, what kind of attracted you to a switcher campaign?
Yeah, I actually report that Chemical Bank came to the Michigan Credit Union. Chemical was bought out by Palmer. They were with TCF. They were bought out by Huntington. So I thought, these people are going to be fed up. There's an opportunity for us to get out and go after those members. So that was kind of the genesis of why we were like, this big.
Yeah, it's very much in partnership, right? We don't know like the local markets as well, right? Where is there specific disruption? We keep our eye in the sky for larger acquisitions. And that's where the partnership works really well with the marketing team and them knowing like, okay, in our market, we know that a Chase Bank or a Wells Fargo is going to leave. There's going to be disruption. We know that those households would really like to have brick and mortar location present. And how can we just message to them and just introduce ourselves? So that's the partnership between them.
Okay, so then you guys want to talk a little bit about the actual delivery of the campaign.
So where we've seen success working with Lake Michigan is tying, kind of going back to the identity graph and tying direct mail addresses. So Claritas we're really competitive in the acquisition space. As far as retention, talking to current customers or current members, there's plenty of MCIF, platforms and CRM systems that already do that. Where again, we're competitive is that we can provide those lookalike audiences and then tie in those other channels. So how you would upload an audience to Facebook or any programmatic spaces you would use those identifiers, first name, last name, street address, email, IP address. And so where we've been successful with Lake Michigan is sending complimentary emails to all of those households that we're targeting. So they're coming home, receiving that piece of direct mail, and later for eating dinner, they're checking their Gmail account, and we're seeing similar branding, similar messaging, the same product offering, and that's where we've really driven a lot of conversion and clicks through these different campaigns. I mean, we're able to identify active emails and the primary head of household, and also secondary. So if it's a husband and a wife, we have emails for both. We'll provide both, just so you're getting more reach across the household. Because not everybody checks their email every single day, at least personal email. But that's how we're kind of marrying the two. And then we do onboard that audience to Facebook for the Lake Michigan marketing team so that they can essentially take the exact audience that we built for them for direct mail and email and then do that social campaign. So when John Smith is liking his buddies fishing photos on Facebook that night, we're able to see like, oh, John Smith's online, Facebook notices him, we're able to match him to Facebook and he's going to get that pixel advertisement from LMCU with again the same product offering.
So this stat, the stat here was actually pulled from the Lake Michigan team. They let us know about 2 times higher than the industry average. So that's a great conversion rate. Some of the other metrics that we measured: 30,000 leads from the fall campaign, 79% email matched back to their target groups, and they had a really good CPA. And I think part of that came, you guys have that in-house ad agency format, so you can do your creative in-house instead of outsourcing it.
that helps a lot. My question for you about the campaign, what was your main message? What was your offer? What was your
We had an offer.
value prop for
Yes, good question. We built our success on delivering exceptional value to our members. We call it demonstrable value. You can demonstrate it. So if you're at Fifth Third and you've got $15,000 in a checking account, they're earning $8.12. Same amount in our next checking account, you'll make almost $450. So it's demonstrable difference. So we highlighted the benefits we offer versus the competition, and also had a kind of a tongue-in-cheek reference to tired of being switched from bank to bank to bank. So I think that people really could connect with that, and they saw the value that we had to offer, so it really tied that together.
So just kind of to put things into perspective, some of the work that we've done with Lake Michigan. So, since 2019, 3.5 plus million emails have gone out on behalf of them, and the campaigns and click-through rates are at 30.39%. And to put that into perspective, at Claritas, we actually did an analysis of 300 acquisition email campaigns of our own clients across industries, and the average click rate for our financial campaigns was 25.3%, which is still great, but seeing 30.39 is amazing.
Are we talking about open rate or click rate?
Click rate.
Click.
It is crazy. It
I'm
speaks.
finding that hard to believe.
Is it member or non-member?
This is all acquisition.
Yeah.
Yeah, we were expecting about 10% when we started. And that's pretty standard. You're doing really well actually with acquisition email, around 10%. So when we started seeing 2025 pretty consistently, and now we're up in the 30s, which is, I mean, again, it's a marriage between the two. I can't stand here and say like, come to Claritas, we can do this. It's, Don's got a great
I
team.
don't remember.
Yeah. We'll talk there.
So our team gets a lot of credit for that.
So this is primarily email driven. Do you do anything mobile based around like geofencing or composting?
We do. We have online banking screen pops that we use as part of our tactics for things. We use OTT, we use broadcast for the larger campaigns as well. So it's a full omni-channel rather than just emails and direct mail. But with Claritas for those acquisition campaigns, those are the two primary drivers. And I think, well, part of the reason for that success is because of the efficiency in those segments. We know how they're going to respond. We know they have a propensity for these products. They index it, so we can say, wow, this group has a 218, or indexing at 218, or this one's at 80. Let's go with this one. So that efficiency is so effective.
So who's the sender? Where's the permission from?
So that's a really great question. So Claritas is an ESP, so we deliver on these emails, and all the emails that we do have are already pre-opted in, and then what we will do on top of that is do what is called permission pass. So we will send every single individual a note basically saying, this credit union or bank would like to reach out and offer you their products and services. We give them about a 7-day window to opt out. The permission pass really helps like really angry people that wear like tinfoil helmets at home. They're like, why am I getting this? And you can send them that permission pass and just say, moving forward, we will remove you. But you're giving them that extra opportunity to opt out. Yeah, double opt out, essentially.
We've had a lot of success with our new branches too, with the segmentation there, because they use the target groups, we target in a specific area. And generally, if you're at $35 to $40 million in deposit, that's a good break even for a new branch. And I think the industry average is like a year, almost 2 years for that. We've been able to hit that in 6 months. Fastest thing is 4 months with some of our branches, because we really zero in on those offers, zero in on those targets, so we know that those people resemble people that are already benefiting at the credit union with the products and services.
If growth is a challenge, make sure that you're analyzing, segmenting your member customer list. That'll help. Adaption, listen to what your customers, your members are saying. If you want to take that feedback into consideration, happy customers, happy members, a lifetime value that is high for you. Uncover hidden opportunities like whoever's making your website, and then of course when it comes to efficiency, making sure that you're actually accurately measuring the success of your campaign, so you know what's working and what's not. Right, and then just put a couple things on the slide here just to show some of the things that we're hearing already about future challenges that are on the horizon. So look out, future, we'll do more sessions like this. We'll do some campaigns, so we want to provide some more tips and tricks for you guys to continue success into the future. Thank you so much for joining our Brunch Learn. Sorry we kept you a little long today.
Thanks, everyone.